Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
All right, guys, welcome back. Good morning, good afternoon, good evening, wherever you are in the world. Thanks for joining me here for another live stream. We are taking a look at the charts here this morning, as we do every morning, seeing what's moving, talking about setups, talking about ideas, and things that look interesting. You've got the NASDAQ and the S&P 500 down slightly. You've got gold down here on the day, silver down on the day. And you've got the dollar making a push here. Dollar's looking really strong right now, I've got to say. And if we take a look at the daily chart on the dollar index, it does look like we are going to, at least right now, it looks like we're heading up to that 106.4 level that we've talked about for the last few, kind of days. Dollar index looking strong. Perhaps this is just more of the same, more of the concept of, central banks around the world are looking to cut rates. Meanwhile, the US is kind of stuck, still seeing stubborn inflation in the United States, still seeing kind of a rocky road to rate cuts, if you will. Meanwhile, other central banks seeing rate cuts is a, positive sign for the dollar. It's kind of like, I made this analogy yesterday. It's kind of like the idea of like you're running a race against other people and somebody trips and falls. Like, obviously that's not good for them, but it's good for you in a weird way, because now the race is going to be easier to win for you because somebody just fell down, right? That's kind of like the rate cut race. The dollar looks strong because other central banks are needing to begin their rate cut process. So we'll see what happens here with the dollar index, but we've got a really strong, arguably what we could do here. Let me get my sound effects. Let me unmute my screen for a second. So let me go to my sound effects, and we're going perfect candle.
Perfect candle.
There it is.
Green candle.
For the dollar bulls, it is a bit of a perfect candle here today. Really strong push. And in terms of the daily chart, again, we've been seeing this consistent higher lows pattern. And with that, a little bit of a move lower here yesterday, we now see some follow through to the upside, again, showing that strength for the USD. Really, really interesting. And you can see that in a lot of the currency pairs for the currency traders in the room. The euro dollar back down to the lows, pound USD back down to the lows. Dollar yen continues its monstrosity higher. Dollar Swiss pulling back further. I am actually watching this chart. This might be a trade setup for me. I will keep an eye on that one. USD CAD, AUD USD. This one actually had some news last night. Last night we had CPI out of Australia, and CPI for Australia actually came in hotter than expected. I believe they were expecting 3.8% year over year inflation, and Australia actually saw 4%, which drove the Australian dollar higher on the event. Makes a lot of sense, right? And then it seems like the market kind of rolled over. Now, if you look at the Australian dollar against the US dollar on a daily chart, look what we did. We shot up on this news and retested resistance on the higher time frame. And even though that inflation number did come in strong, it wasn't strong enough. It wasn't hot enough to really break out through these levels. So we do see the Australian dollar giving back those gains here. And we'll have to see where this goes. I was actually watching this one because we had the Australian dollar shoot higher on hot inflation. And this is actually an edge finder setup right now. The Australian dollar getting a bullish read. So I was just curious. We're getting a +7 on this. Inflation data came in hot. That should show up here in the scoring in AUD USD. Inflation readings hot. Yep. So that is giving some bullish push, but there was not a lot of follow through. So for me on the technicals, even though the fundamentals, that's a pretty bullish break higher. The technicals here for me, the concern is that we didn't, close convincingly above that daily chart resistance zone. So if we do get, if this is just kind of a pullback today, and then you see something like this, perhaps the dollar cools off. I really like the Australian dollar to the upside. So in terms of currency trades, that's actually one that looks interesting if we see a break of consolidation, something like this, that would get my attention. So I actually, that makes a lot of sense to me to potentially look for upside on the Aussie dollar if you see some follow through on the technicals. Arguably more important is what happens with the dollar in the coming days. We have tomorrow US GDP numbers, and on Friday we do have core PCE, both of which are very, very important to the story on the dollar and for everything else. Stocks are going to move. Gold and silver are going to move. Speaking of gold and silver, gold down here, not going so hot for my position. If we do break this level of support, I've said it pretty clear several times on my channel, I will be out of this position. If we break 2280, that's going to be kind of my signal to move out of this idea that I had on gold. Again, the dollar strength kind of came out of nowhere here. Well, not out of nowhere. The dollar has some bullish cases, but I kind of was thinking that gold would hold its own, but we might be out of this trade. This is coming down to support. I'd like to see technical bounce from here, and if we don't, time to bail on the trade. I'm not married to the trade. I could be completely wrong about this gold move. And if I do get stopped out, does it mean that I just abandon gold bullishness forever? No. I still think that gold has upside this year, but this entry might have been early, right? Now, what happens in terms of P&L for me? Well, I made some money off of this bounce. I stopped out, and then I re-entered. If this trade comes down here, I pretty much give back, and it's break even across everything that I've done in the last, month, which is not fun. Obviously, that's not fun. But break even, months, break even periods totally happen, and it's completely normal. So even though I might have been early on my trade here, which will be proven to me if price breaks support, even if I am early, again, we move on. It's just a trade. So when it comes to gold, I'd like to see support hold here. If we don't hold here, I'm out. Silver, I also have a trade that's gone against me here. If we don't hold support here, then I'm out. It's looking like I'm probably going to get stopped. If we go any past this level, then I am out of my silver position and I am out of my gold position, which again, not helping is the yields jumping here today. So the dollar index is up with yields up today. So TLT also giving back some gains today. So long story short, it's not my day in terms of P&L. In terms of TLT, where am I at with this one? I would like to see price again hold support here. And if we don't, I may... Well, actually, you know what? TLT has been a position trade for me for a while. TLT, what would get me to close out? I am in profit on this trade still. For me to get out of TLT, I would have to see something. Well, put it this way. If we get like a really hot round of inflation, TLT is probably going to be closed out for me too. Why do I say that? Well, if inflation is hot and TLT sees yields go up, right? If expectations for rate cuts get thrown out the window, TLT probably goes down too, right? I've been commenting here that Nick has been wrong on gold. Yeah. There's always people commenting everything. You have to understand, I might be wrong about gold here, but I've made money on gold this year, like a lot of, good returns on this. And stop losses are just part of the game. You could ask anybody, the greatest trader on earth gets it wrong sometimes. I'm not the greatest trader on earth. I don't claim that. But the thing is, when it comes to gold, when it comes to silver, first of all, this hasn't hit stop loss yet. It could, and maybe it does. If we don't hold support here, then I'm out. But nobody knows with certainty what's going to happen in the markets. And a stop loss is just insurance. It is just a way to close out of a position that isn't working. Doesn't mean that my campaign on gold has been a failure. I've made a lot of money on gold during this upside. I'm giving back a little bit of it here with my trade here, but I made money off 2,300. So if it takes me out, it takes me out. But I would not say that the campaign this year on gold has been wrong. I've been really, really right on the overall direction of gold. Just a couple early entries, it seems. Yeah, no, I mean, you'd be surprised, man. I mean, the comments are, I appreciate it, Dan, by the way. I try and keep it real with you guys because it doesn't feel good to have an idea go wrong. It definitely doesn't feel good to have an idea go wrong in front of 400,000 people or whatever. I mean, not that many people watch my videos, but you know what I mean? Like I have ideas that go completely wrong. This year has been a really good trading year for me. But not everything in that year is going to be spot on. So it is what it is. The VIX is up 2.49% here this morning, the dollar index. Again, that VIX is probably going to go up if you see the dollar keep pushing higher, because this is going to throw up some red flags to a lot of traders watching what's going on here. I wouldn't be surprised if that dollar keeps rising, if that drags the indices lower off, prospects for rate cuts maybe not being so clean cut this year. We're still expecting right now, I believe there's expectations for one rate cut this year. If you get something here in the cards that changes that, if we drop to 0 rate cuts per year, if we jump to 2 rate cuts per year or this year, that's going to be huge, right? That's going to really change the story. Let's take them all. Let's take them all on today, guys. But the fundamentals say gold should go up. Fundamentals, just like any strategy, are not perfect. Not to mention, fundamentals like technicals have levels of discretion to them. You can fundamentally pick apart a bull case and a bear case, but at any given time, fundamentally, there is a bull case and a bear case for most things. So you could pick on my idea on gold and say, oh, well, you said fundamentally it should go up. I did not say that. I said fundamentally, I like the probabilities of it going up. But if something changes in the fundamental story, it could go down, right? There's no certainties. When you look at the fundamentals right now for gold, right? If you're looking at central banks globally cutting interest rates, and the Fed their next move is going to be a rate cut, at least according to them, according to what expectations are. If something changes in that narrative, though, gold could easily go much lower. Right? I'm not a fortune teller. I'm a trader. So I look at what is happening right now. I make probability-based decisions. I manage risk. And sometimes that managing risk part means taking risk and taking a loss, right? So as I go through this, I know my comment section will be riddled with trolls who never take stop losses. But I can tell you, you may not ever take stop losses, or so you claim, but I certainly do. And it doesn't mean losing overall. Stop losses are just stopping points to a campaign. I like to think of like my overall idea on something as a campaign, and then the specific trades that I enter and exit as just battles in the campaign, if that makes sense. So again, like I said, I bought gold over here, saw a huge profit. Like I was up 20K, shoulda, coulda, woulda, closed the whole thing right there. I did not. So then I gave back huge amounts of gains on this candle, stopped out, trailed out for a profit, and I had walked away with half of that gain. Then I re-entered, and this trade's not going well. But these are all battles in the campaign. These are not an all-in YOLO trade. If that resonates with you, if you're supporting the transparency here that I'm trying to do, even though it is painful to talk about losers in front of an audience, if you appreciate it, do me a big favor, hit the thumbs up button on the stream. Appreciate you guys. Don't worry, it's just one single trade. It's about the campaign. It's not about every single battle. You can, it's like anybody play Battlefront 2? There was a clone, like there was like when the clone, you're playing as the clones, one of the commanders, one of his sayings would be something along the lines of like, we may lose this battle, we'll win the war, or something like that. And it's so nerdy of me to pull that up, but that was one of my favorite games. Anybody else play Battlefront 2 like it was no one's business when they were a kid? Man, I played so much Battlefront 2. I'm talking about the old Battlefront 2, like the 2005 game that was way beyond its time. All right, so let's keep pushing on. So the dollar index, like I said, up 0.5% almost today. The S&P 500 is slightly in the red. The NASDAQ slightly in the red. Let's check on our old friend NVIDIA just to see what's going on there. NVIDIA on the 4-hour chart. Stock market just opened up, by the way. And let's see, drop it down to a 5-minute just to see NVIDIA out of the gate here. We saw some pre-market selling. Now NVIDIA showing a little bit of a sign of some bounce. And we'll see. This one, NVIDIA is so important to the market because, again, it is, I don't think it's the biggest stock anymore. It's jostling for position when it comes to the largest stock in the world. It's very close. But if NVIDIA falls, it really will likely take the market down with it. Now, to poke holes in my own argument for a second, we didn't see that a few days in the last week or two. We actually saw such a resiliency from the stock market that while NVIDIA dropped 15, 16% from peak to trough, the stock market was kind of flat during that same period. You know, if you had asked me, again, another thing I've been wrong about with this market has been, you know, if you asked me 2 weeks ago, Nick, given a 18% drop in NVIDIA, what's the stock market going to do? I would have told you, man, that stock market is going to drop 10%. It's going to drop, maybe not 10, maybe 5 to 6, 7%. That would have been my guess. Instead, totally wrong, 1.3% from peak to trough. Why? Well, it's because there's so many killer companies in this story right now. Apple, Microsoft. Well, I should take that back. There's a few huge and ginormous names that are, you know, in total control of this market right now that can pick up the slack where NVIDIA drops it. So, yeah. Realest trader I've ever known. I always tune in. Appreciate you. Big thumbs up. Thank you very much, guys. I appreciate it. You guys are helping me to lick my wounds today. No, it's again, the thing about trading that kicks people out of this, like what makes it so people can't stay in the game, is that losing streaks and drawdowns are, I don't know how to say this in a more pronounced way, inevitable. They are inevitable. Nobody, no matter how convicted or how intelligent, gets it right all the time. So if I take a loss on gold, or if I take a loss on TLT, it's just a trade. And, you know, again, it doesn't mean, here's something I should add about this gold and silver idea that I'm in. We might see this thing rip off 2,300, or we might see, let me show you another one. This might be salt in the wound, but it could totally happen. What if we dip through this level, take out my stop loss, and come back? Oh my gosh, my comment section will be nasty. Trust me, I've been there. Sometimes this happens, boom, bam, and then I just get, I think I get like letters in the mail from angry people. But please understand, when I'm showing you guys my ideas, I'm putting my own money on this. I'm not telling you what to do with your account. You do what you want. I have predefined risk. I know what I'm doing in terms of my account size, my position sizing. A stop loss is a stop loss. But what if that happens? What if this happens and we get this big candle on really cooler than expected PCE numbers? What if that happens, Nick? Well, you can play that what if game and you can get all scared endlessly. You can terrify yourself, right? The fear of missing out, the fear of, well, what if I'm just going to move my stop loss so I don't get whipped out before it rips? Well, you don't know if it's going to rip, right? We don't know what PCE numbers are going to be. For me, what if this happens? What am I actually going to do? Well, if price comes down here, I'm going to pause and I'm going to relook at my gold position. If we stop out, then what I'll do next is I will wait to see what PCE and GDP numbers look like. And if we get GDP numbers that are really cool and PCE numbers that are really cool, and we see this move, I'm not worried about catching the perfect bottom. I'm worried about catching the bigger picture trend. I'm a swing trader. I'm not a scalper or a day trader. So if we get a huge, let's say we get the worst case scenario, which again, you have to be ready for the worst case scenario as a trader. If we get this, and then we get this, then what do? Well, it's back to square one. If this data came out really optimistic for rate cuts, right? Then what we look for is we look for retests, and I'm looking to still play the bigger picture. Again, it is about the campaign. It is not about the battle, because you can lose battles in a war and win the war overall, right? So my campaign on gold is I think it goes higher, but my opinion on that could change. What if we get really hot inflation data and we don't see rate cuts this year? Then I need to adjust. I need to pivot and move on from this theory. But right now, just because gold is down does not mean my theory is completely wrong. Again, it's about the war, not the battle. So, yeah. Anyways, should just mention, guys, if you appreciate the transparency and you'd like to come join the VIP room, that is currently 50% off. If you're not already in the VIP group, you appreciate the transparency. I share all of my trades, good and bad, inside of the VIP room. While this trade is not working out, we've had a really great year. And if you'd like to come join in on the action, you can do so for currently 50% off. Click the link in the chat right now. Take advantage. Send us a direct message on our website, and you can get half off our VIP membership group. Again, I'm showing you, everything good and bad that is going on in my trading. We've had a phenomenal year overall, but recently a couple trades not going super well. That's just part of trading. And if you embrace that, if you accept that and you appreciate that, I'd highly recommend that you come join the action, come get involved. We do coaching webinars. We have chat room access. We share every trade with full breakdowns and analysis, so on and so forth. Come take advantage. Hit us up. Click the link. We'll drop it one more time in the chat. Get 50% off the VIP room. And let me just show you what that looks like when you do so. So click chat now, click VIP signals, and you can get actually we'll do 55% off. It is 55% off if you use the link right now. So take advantage, come join the action, and that'll be awesome. Let's see, what are we looking at in terms of the schedule today? We have got, today is June 26th. We've got Kenzo coming on shortly, and then we have Chris and probably Frank as well coming on shortly after that. Got a good lineup for you guys today. Should be good. Let's take a look at top setups right now, and then I'll show you what I've been looking at offline. So SPX actually showing up as a potentially bullish setup. I would like a deeper pullback, but I'll keep an eye on that one. Gold bullish still overall. Again, technicals not looking super hot today, but we'll keep an eye on that one as well. TLT pulling back, but I'm still liking the upward trend on that one as well. AUD USD, I mentioned I'm looking for a breakout on that one. Then on the sell side, nothing really here that I trade. I don't trade Euro Swiss, Kiwi Swiss, Pound Swiss. Just not something I usually look at dollar crosses if I'm going to trade FX, and I look at mostly commodities, indices, etc. for things that I actively trade. So that's current watch list, kind of a thin pickings there. I wanted to show you this chart too. This is kind of fun. I was working this morning on this investor sentiment survey tool. Really kind of interesting. So what we're looking at here, and if you're an EdgeFinder user, head over to sentiment, click AAII investor sentiment, and you can pull up this same tool that I'm using. So the investor sentiment survey is really cool because what it allows us to do is it looks at market participants and how they're feeling about the stock market and how, investors say they're feeling about the stock market is really important because it can be a useful indicator in the sense that, when people right now, they're getting very, very bullish overall. You can see that the kind of outlook is very, very positive for stocks. Then you have periods like this, like 2022, where we reached like a peak bearishness. And it was actually a really great time to start looking at longer term positions in the stock market. So I thought this might be worth taking a look at. And by the way, while you're playing around with this, we did add a drop down bar so you can actually pull up any chart that you'd like to and cross it against the investor sentiment. So with investor sentiment, again, we can see, like, for example, that in 2020, people got incredibly bearish on stocks and it actually drifted higher, even though people were bearish, right? And then it reached kind of a mania level here. You can see early signs. This sentiment is not by any means like a perfect indicator, but you can see when the mania kind of got going here. It's something to pay attention to when people get incredibly, convinced one way or the other with the markets. Oftentimes the market will actually see big reversals. So yeah, it is, again, we're seeing a very positive sentiment this year. We haven't seen any negative sentiment on an overall basis since the beginning of this year, except for maybe just very slightly here. But for the most part, I thought that was worth mentioning. Also, for those of you guys who like this tool, you can also scroll down here and see the kind of breakdown further. So like right now, the latest update is that you have 22% of investors saying they're bearish, 44% saying they're bullish, and 33% saying they're neutral. So, really interesting. I love this indicator. I think it's a really cool one to look at. And, big swings in sentiment can be very, very useful to not just index traders, but traders as a whole. So yeah, keep an eye on that one for sure. S&P still down just slightly on the day. The NASDAQ's flat on the day. Dow Jones down slightly. RTY, this is the Russell 2000, down 0.5%. The VIX up 0.7%. It was up more than that just a moment ago. And yields are climbing, which is leading to a relatively strong dollar move here this morning. All right, guys, we're going to take just a quick break, and then we're going to be joined by Kenzo from his side. We'll be joining in just a moment, just after this quick break. Stay tuned. We'll be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we're back with Kenzo. Hey, Kenzo, how are you?
I'm doing great, thanks, and you, man?
I'm doing well. And Kenzo, you've got a big coat on. Is it cold there right now?
Yeah, it's actually cold. Especially inside, it's quite cold. Not really that aggressively cold, but yeah, it's actually winter.
Yeah, that's interesting because it's always so unique to me because obviously people from like Australia and South Africa, people that I talk to, they'll just be on a completely different cycle. Like it is hot as anything here in Georgia, so always interesting to see the just the different hemispheres of the world, of course. Kenzo, let's talk markets in terms of things going on. What are you watching here today?
Yeah, I was just all over the place, man. I was just watching gold, NASDAQ, US 30s, some currency pairs like USD CAD or also USD JPY. So easily see that the dollar is quite strong. So yeah, most of the pairs which are going against the dollar, they are actually currently suffering. But on the dollar, I think maybe that bullish move might be coming to an end, maybe. As when we check DXY, it's quite closer to the resistance area. Maybe we will start to see that reversal. But yeah, it's up to the market. Maybe we might see a breakout. But at the moment, I think maybe the market might respect that level. And from there, it's where maybe we will see other pairs starting to breathe, because at the moment, the dollar is quite strong.
Sure. Yeah. And again, as you mentioned, the dollar index breaking out of this consolidation zone between like the 104 and 105 level, and now seems to be kind of making a push up to that level here. You know, the thing is, Kenzo, we've got a lot of data for the rest of this week. You have, GDP numbers tomorrow morning. You have at the same time, well, actually in 9 minutes, we have home sales, which could potentially be interesting. But then on Friday, you have arguably the biggest event of the week, which is the core PCE number. So PCE is another measurement of inflation, and that is all what it's about right now. It is all about the inflation statistics, because if inflation is coming down, the Fed can cut rates this year and keep kind of on target. But if inflation comes in strong, then we've got kind of a problem for the story for the indices, and the dollar could again really rip higher. So to me, as we approach this level, I kind of lean into the idea that I think you're right, with the dollar probably will top out around 106.4. But we'll have to see what the data brings us, because again, it is also possible that you get a surge in the dollar on hot inflation. But if we take a look at some indicators really quick, Kenzo, I wanted to just bring this up. We've talked about this a lot before, but claims data for like jobs have been on the rise. So we have unemployment claims going up. We have job openings going down. And what we can see here is just a trend in the the labor data. So it seems like the consumer's starting to show some signs of slowing, the labor market showing some signs of slowing. That would suggest perhaps inflation could be coming down a little bit. The only thing that might hurt that story that I can think of right off the top of my head is the recent move in oil, which has been higher in the last month. Have you thought about that at all?
Yes. At the moment, I think the most important one, as you said, it's PCE. So if PCE, if it goes down, I saw the estimate there. They said maybe it might be a smaller number. If it's like that, that is going to be a very good one. Because maybe it will be around this level. Let's say Friday, maybe the market will be playing around these levels. Maybe we're going to get some sales. But on the other side, oil is also going up, as you said. And I've been expecting it to go a little bit higher, but at the moment seems to be consolidating around this level. But still, we're no longer on that downtrend. So which means we expect the oil prices to go higher. And that has a direct impact on the inflation side, because the more oil goes up, we know very well that also prices will be going up. So that is not really good. But let's just hope that Friday is going to be a better one. I'm not really worried about GDP, but PCE can be aggressive sometimes. So if maybe the numbers are going down, or if it shows some cools off, that will be good for us to keep buying Nasdaq or gold or anything that is going against the dollar, you see. But at the moment, gold doesn't really sit well. I mean, oil, sorry. Oil doesn't look good. It seems like it's trying to go higher.
Yeah, and again, that for people who are kind of not fully in tune with the fundamental kind of implications that rising oil prices have, if you think about rising oil prices will impact all of the transactions between oil coming out of the ground and getting, products to the store near you, right? That in between, all of the costs of businesses spending money in order to get that product to you have to go up if the price of oil at the beginning of that process goes up. So, it is something to keep an eye on. And it is one of those things that even if labor data is cooling off, if you get supply side inflation like that, like again, commodity prices going higher, if that happens, then you might be looking at an environment like we saw in 2022, which was a year where we saw a long stretch of kind of oil bullishness, and that ended up kind of topping out in the summer of 2022. Just show my screen here. So 2022, like we topped out here, and this led to a huge period of inflation. So we had in kind of tandem, we had both oil prices rising, and we also had supply chain disruption from 2020, the COVID-19. So you had supply chain kind of shortages, and you had rising oil prices, both of which are, can be very, very inflationary. And it has nothing to do with kind of jobs market stuff or, consumer sentiment. It's all about the supply of products. And so, with oil prices on the rise, it is always worth keeping an eye on for the prospect of that could lead to inflation. That's why you'll hear it talked about so frequently. So even if you trade currencies or if you trade indices, oil is really important. Speaking of indices, Kenzo, what are your thoughts recently on the index, the S&P, the NASDAQ, or the Dow?
I was looking at US 30. I was expecting maybe a nice pullback here, but it seems like it's trying to reverse, or maybe let's say it's trying to retest from this previous resistance here. Maybe the market will end up going higher. Plus, we can easily see that NASDAQ and S&P 500, they are already higher. I think there is a room for USD to try to keep up with that move. So there might be a nice reversal here. So on NASDAQ, yes, I was still going higher as we got some nice reversal. I think it was yesterday or before that. So we got a very nice reversal. So to me, this is not really enough a sell, but at least it's better than nothing. So we got something there. But I still believe that maybe we might still have the last a nice sell-off before we see an aggressive push to the upside, you see. So S&P 500, I did not really do much as it was just moving quite similar to NASDAQ. So I did not really want to just go on both of them because most likely they will just react the same. So yeah.
Sure. Yeah. And I like your chart markup there too on the Dow Jones. The Dow Jones has had a very different performance recently than the NASDAQ. The NASDAQ has just been so strong with the NVIDIA stuff going on. But in recent times, we at least saw a little short period of time where the Dow Jones kind of came alive, has since started to already pull back again. But I thought that was interesting. I also see the kind of chart markup here on the Dow Jones. This is a daily chart, and you can see, this level was a pretty key breakout previously for the Dow Jones. If I was to be kind of looking to long indices, personally, I like the idea of actually looking at like the Dow Jones more so than like the NASDAQ personally, just because I think that I'm a little bit cautious with the whole NVIDIA hype trade and stuff like that. So I'm keeping an eye on the Dow Jones as we pull back here. This may be an interesting setup around the, let's call it the 38,900 level. So I'm watching the Dow on a pullback, US 30. We'll keep an eye on that one for sure. I guess next question for you, Kenzo, is you mentioned gold at the start of the stream or the start of your show segment here. What are your thoughts on gold right now?
Yeah, gold, it seems to be all over the place at the moment, but it seems to be reversing towards that support area that we had before. So I thought maybe the market was going to continue nicely with this smaller uptrend, but the market actually broke out of that. So I was surprised to see this aggressive move because I think earlier the market was around this zone there. So it shows us that the dollar is quite stronger, especially against, like, let's say any pair that it's going against the dollar now. it's quite struggling. But where we are, it seems like the market might end up respecting this support area. Maybe we will see a nice push to the upside, or maybe the market might actually break out of this area. But that it's like the percentage for that, I think, is going to be low. I think we might get a nice reversal from this one, as we had some very nice supports from little bit back there. You can see that this is a zone where the market used to find its support area, and the market just reached that level. So we might get moves like this. You can see from previous areas where the market was respecting that and bouncing back. But I don't really know why the market is moving like that, especially at the moment. But maybe we'll know why, because maybe there's some good news happening on the dollar side, and it makes the dollar to be quite stronger. As we are waiting for the news, maybe the news are out already.
Yeah, I think we had just a moment ago, we had home sales come out worse than expected, which is a slightly negative thing for the dollar. If you think about home sales being light, that is a show of the consumer. I would argue is the number of new home sales. The home market in the U.S. I'm not sure what it's like in South Africa, Kenzo, but the world, at least in the U.S., it's a real tough spot because you have homes not selling very much because, number one, the prices of them has gone up a lot and it's very unaffordable to people. But at the same time, the interest rates being higher make it even more unaffordable. And at the same time, on top of that, people who have homes in the United States, who have low mortgage rates from when they were much lower years ago, are not willing to sell their home, because if you sell your home, you just have to go get a new home with a much higher mortgage rate. So in the US, at least, we have a bit of a gridlock in terms of the home sales world. So definitely an interesting spot. I think, in terms of the long story for home sales in the US, the home market will improve a lot if we get sort of a true soft landing where you get the economy staying in there, we don't get a crash in employment, but we also see inflation come down to the point where rates can come down. But I don't know, that was just what is it like in South Africa? Is there something similar? Home prices on the rise, or is it not so similar?
No, it's the same, especially if inflation goes up. So from like since 2020, they've been increasing the rates, and those rates did not really go down as quick as the way they did increase them. So at the same time, that makes everything that has to do with homes, whether you're buying the cars, that is going to be extra expensive because the rates are a little bit higher. So which means if you buy the house now, obviously it's going to be quite expensive, because if you compare like before 2020 and now, the same house, like the difference is almost 20%. So that is too much. So I don't think the home sales will perform very well until maybe we get rate cuts, but not really once, maybe twice or three times. Then it's where we're gonna see a relief in that. So at the moment, I don't really see that performing very well, because it's not really easy to buy. When you buy something now, it's like you just like to waste money because you'll be buying, we'll be paying extra
Sure.
with that. So, and unfortunately, if you go and ask people who sell those houses or whatever they sell, they will just tell you that it's good, but you know that you are going to pay like twice the price actually. So that is not really good, and it's not really surprising once we see those home sales going down.
Yeah. Thanks for breaking that down for us. And again, a really interesting and important market is the homes market world, and not nearly as important, but maybe fun to talk about market is Bitcoin. I took a trade on Bitcoin off of the weekly chart. Actually, I liked this pullback here, Kenzo. I'm so far seeing a nice little bounce. We'll see if this can last. I think this is really dependent on ultimately whether the stock market goes higher or lower. But what are your thoughts on Bitcoin? Do you have any thoughts on Bitcoin?
Yes. On my side, I've been just watching it for quite some time now. If you can check, we have this actually we were on a very nice uptrend, but if you can check it from this horizontal support here, horizontal structure, we have a stronger support around this level. So which means the market might respect here and still continue to the upside. So I think it's a very good level for anyone who wants to buy, and which means at the end of the day, we might actually adjust our trend because they still respect our previous horizontal look for that to buy. And maybe it might continue to go even higher. And maybe, let's say on Friday, maybe if PCE will be a little bit lower, maybe we will see it aggressively pushing to the upside. It's possible. But at the moment, even if maybe we are on a support, it might still move quite slower.
Yeah, I think that Bitcoin's an interesting one because I was having a conversation yesterday with our next guest, actually, Chris Pulver. We were talking a little bit about Bitcoin and how I think that, if you do actually see the bull market continue in stocks, if that is set to continue this year, I think a place for me that I like to have a little exposure is cryptocurrency. It is further out on the risk curve. You have all the different levels of risk in terms of markets. You have like TLT of like bonds from treasuries, and then you have S&P 500, and then you have the Qs, and then you have stocks, like individual stocks, and then you have way out here you have like Bitcoin, and then you could even go further and say like altcoins, like way out here. So there's this whole like risk curve, and I think that if you told me, like, and I don't know this for sure, but I'm just making a call here, that for the rest of the year we do still see positive gains in the stock market, then if you go further out on the risk curve, you'll either be more rewarded or more punished. And in my opinion, I think that the stock market may have a period of consolidation, but I think that overall it does continue higher. And if it does, again, I like the idea of having some exposure to some of the higher risk, higher reward names. I do have still a small position on that. But Kenzo, I want to thank you for coming on, sharing your ideas on everything here, everything from indices to currencies, commodities, etc. Thank you for coming on and supporting what we're doing here on a A1 Trading Show. Before we have you head out, let's just real quick, we'll drop the link here in the chat. If you guys would like to go subscribe to Kenzo's YouTube channel and keep up to date with what he's looking at, make sure, take 2 seconds, go subscribe to Extra Hot Forex on YouTube. Kenzo, thank you very much for coming on the show today.
Thank you very much, man. I will see you on the next one.
All right, sounds good. See you next time. All right, guys, and we are moving right along here. We've got, again, the stock market open, still flat on the day, not really making anything substantial. It did have a bit of a sell-off here this morning and bouncing a little bit off of the open session now that the stock market is moving. We'll see how that kind of plays out, and we'll keep an eye on everything happening. The dollar index on the 4-hour chart, a little bit of a reversal candle potentially here. We are going to have to see how this closes at this level. On the 4-hour chart, you got that 105, right around the 106 level. It is punching up against that round number. Let's see how price candle closes here. I mean, if you get a candle that closes with a long wick like this, it is possible that we kind of head back lower in the short term as we await PCE numbers, but we'll have to see. There is also a good case to be made, in my opinion, that the dollar index could continue to push higher and retest this 106.5 level, let's call it, where we kind of topped out before and sold off. So we'll keep an eye on that. If I take any trades, it will be shared inside of our Discord VIP room. And if you're not already in there, it is currently 55% off for stream viewers right now. We're going to drop a link in the chat right now if you would like to join the VIP Discord. Just a heads up, what you can get inside of the group here is access to all of our trade notifications, our chat rooms, our coaching webinars, strategy guides, and of course, all of the trades that we're taking. So if I take an index trade or a commodities trade, if I'm trading gold, silver, S&P 500, an FX pair, all of those notifications from myself and Frank get shared inside here. So take advantage. Get the 55% off discount by clicking the link being dropped in the chat right now, and we'll see some of you guys in there. All right, real quick, we're going to take just a short break, and then we'll be back with Chris Pulver for the next segment of the show. Stay tuned. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream. All right, we're back with Chris. Hey, Chris, how's it going, man?
What's happening, Nick? Happy Wednesday, dude.
Happy Wednesday, and good to have you back on the show talking markets here.
Yes, sir.
Stocks are flat. They're not making big moves in either direction, it seems, right now, except for the Dow, which continues to take a little bit of a beating here after yesterday's sell-off. The Russell kind of flat still, not making too much of a move. The VIX up just 1%. Dollar index is moving higher here today. What are you looking at today?
Yes, I did a pretty thorough review in the currency land this morning, and I did take a fresh position on New Zealand dollar short. I'm still long dollar CAD, still long dollar Swiss. Aussie dollar, interesting move. So interesting data. Pound and Aussie hold rates, right? Pound still at 5.25. Aussie's at 4.35. Inflation data for both countries came in slightly higher than expected. So if you look at the Aussie overnight, the Aussie was the strongest currency pair overnight. It's faded a little bit, but the dollar's been stronger. But that CPI data came in 4%. By the way, did you expect to see the UK less inflation at this point than the US? It was last year when they were 11%, and they're like, the UK is in trouble. It's going to be a recession. They're down to 2% year over year. Look at us.
Yeah.
We're 3.2, 3.4. So,
yeah, exactly. And look at there's a visual to what you were saying there. You had inflation. Here we were midsummer of, July,
right?
September 2022. US was starting to see inflation come down. Meanwhile, inflation kept climbing for the UK. And as you're pointing out, not only did that UK inflation start to roll over and follow suit, where we paused, the UK has continued.
Yes.
And you can see in green that this is the inflation for the UK, blue is the US. And as you're mentioning, inflation is at their 2% target. So I think it's only a matter of time that they look to cut rates next, right?
You would think so. And I also wonder, is like, do they just have more responsible consumers than we do? I feel like our consumerism was kind of sustained, higher prices, and we're just continuing to spend. And it always cracks me up when it's like, stimulus money. It's like, what are you talking about? I mean, everybody got a check for what, $600 in 2020?
Yeah.
It's like, I didn't think $600 could stretch most people 4 years. That's just me.
That's not in today's world, no.
Right.
For
So
4
I
years?
mean, yeah. I mean, well, if I live on the street, maybe $600 I could stretch it, dollar for dollar. But
Right.
I would think not. So, but I thought it was interesting. I mean, the numbers are coming in, so it's ticking up higher with so CPI data that came in. I was just looking at this calendar last week. So we had CPI year over year on the 19th. So last week came in right at 2%. That's what caught my eye. And then this week, the Aussie jump overnight, CPI year over year forecast at 3.8 came in 4.0. So Aussie, maybe holding firm at 4.25%. So we're still looking at that whole monetary policy divergence situation. But let's just talk charts, talk technicals. DXY is 105.60 was my resistance level that we are breaking. Now it's not super convincing, but is enough so that I am now looking to get long if the technicals look good. So my short euro dollar is looking better. My New Zealand dollar I took fresh today. My dollar CAD's turning. My dollar Swiss is fine. Dollar yen, also another one that is where? Above 160. One thing I want to note on the dollar yen for the weekly time frame is if we are going to breach 160. Somebody asked me this morning in my trading room. I like your thoughts on this, Nick. Do you think that 165 or 170 is a better probability or higher probability than a full-on reversal back to, let's say, well, even here, even if we pull back to 152, do we go to 165, 170 before we hit 152? Thoughts? I mean, it's an intervention trade at this point. Like, I don't think the Japanese yen just strengthens on its own. There's going to have to be something that breaks for the JPY to really rip back all the weakness it's had. My thoughts, but what do you think?
I would agree that I think that the continuation is more likely than a reversal at this time because,
Yep.
At least for now, something needs to change. And I think that, I'm sure you know who Kathy Lean is from BK Forex or BK Traders. And Kathy's made the point that something from the Bank of Japan needs to change. There needs to be something different than just hey, we're going to do some intervention here and some sudden buying of the yen. I think that they need something more material than that in order to get the yen off of, and I don't know what it is, but there has to be something that is more, because the market has figured out that is just putting band-aids on a huge open wound. It's not doing enough for now. Now, what will change that? Probably a shift in global economics, like a shift in, if you get the labor market in the US continuing to materially come down, and then inflation falls, and then all these other central banks are cutting rates rapidly, and then the Bank of Japan is not doing so.
Right.
Then you might have a case for the yen, but timing this one seems to be very tricky. I'm not quite sure where the top of this move is.
Yeah. Good luck timing it. So I mean, and my exposure right now is not in currencies with the Japanese yen. Let me see here in my account. I did get some exposure on the FXY, and I just bought a small chunk of shares. I bought it at 58.62. So let me do the math on that. I'm down about 90 cents. Now, can I handle 90 cents? I think I can. 90 cents down in a drawdown, when the reality is we've been down hundreds of pips in currencies. So this is why I decided, look, I'm going to dip my toe in the water with the Japanese yen for some bigger picture move. But to me, FXY ownership is better than playing options on this, is better than being in the currency market where we could have more interventions and flashes and things you can't control. So I don't want that type of exposure for my portfolio. I'm comfortable taking, I'm not going to say a sizable drawdown, but I mean, I'm down 90 cents right now on just my first tranche. So 100 shares at 90 cents. So I'm down $100. Whoopee, big whoop. So way more manageable than what would be, look, even if it drops to, let's say 55 or 52 and I'm down, $500, it's totally manageable. That's still less than, it's a fraction of 1% drawdown. So I'm not in a hurry on the Japanese yen. I think it's, to me, and we talked about this, last week, the week before. It's like, I know the exposure is probably early. I think Frank was actually trying to push back. He's like, "What makes you think the timing is now?" I'm like, I don't think the timing is now. But I think that when the timing starts, it might be too late, or the thing's already turned, and I could see, we can see hundreds of pips that are starting to gain traction. But timing wise, if I'm going to give me a 12-month plus or minus window, I think that by the end of 2025, Japanese yen is having some type of repricing event. Whatever that looks like and whatever catalyst it is, we don't know. I don't know. But I would say if we go into 2025, plus or minus 6 to 12 months, I think if I give it a year, we could probably get that window as like, I can catch some profits on the Japanese yen. So this is my way of trading it.
And even a kind of mild turn down in global economics could turn that into a pretty nice hedge trade if you think about it. It's like if you get if you get monetary policy like we talked about last time, just kind of tanking the other direction off of a real slowdown, the yen is going to look relatively attractive, I would imagine, because again, that's going to be a rush to safety, and then the Bank of Japan, although they're dealing with struggle, maybe there's another case there. Is like the question would be, would the Swiss franc also see some strength in that? I mean, probably, but the yen would certainly have a lot of room to move if it if we get some sort of change in the wind, if you will. So
Yeah.
I don't know. We'll see. In 2022, the dollar yen skyrocketed during, where the U.S. central bank was hiking rates. So if you get an environment where the U.S. is cutting rates rapidly, the yen might do the opposite, right? We might see something like that.
Yeah.
So.
Yeah. And I mean, I hope it's not a full-on financial crisis in order for the Japanese yen to get stronger. But at this point, I mean, when it's ripping up and pushing up and drifting up and melting up, it seems like there has to be some like bad situation ahead for the repricing to occur. I mean, and this goes right along with the bear camp, right? Everyone that's super bearish, everyone that's probably exhausted now by trying to be bearish. Japanese yen's the same thing. You're fighting the flow, you're swimming upstream, and so far, how's that working for you? Outside of an intervention that was good for a week, it's right back where we started. And so, in fact, that was like our last trading battle. I was essentially hedged on those yen pairs, and that was how I generated profit that week for the trading battle. But I will note this. I mean, from the technical side, on the dollar yen, this high in price, drifting a little bit higher in price, I'm noticing some disagreement. If the weekly gets back into a overbought situation on the RSI, there could be some divergence there, just like we had previously. But if we have divergence, I could see we just pull back to a trend line and the market buys, and I don't want to fight this. So anyway, we can wrap it up there on the yen crosses. But I thought this week that if the dollar yen crept up to 160 and there's some type of acknowledgement, then maybe that 160 level does matter. But now that we're just kind of drifting higher, we're 50 pips above it. If this candle closes bullish above 160, I think this BOJ intervention level is no longer 160. I think we're now looking to just drift higher, and that could be another wave of weakness on the yen crosses. So I feel for any traders out there that are trying to short the yen, but you're dumb. Like, don't do it. It's not worth it. I'm sorry. It's just not worth it.
Yeah,
so I mean, listen to a trader that has for years said I made more money by not trading the yen for this exact reason, because it is such a disobedient currency pair at times. When you think it lines up and it's a perfect technical trade, it doesn't care. And then when it does care, you end up chasing your tail the other way, trying to catch it, and it's bull flags and bear flags, and it doesn't pull back. So it's just a super challenging, slippery currency pair that can show thousands of pips, and you're like, I got zero of it. But don't feel bad, because there's 21 other currency pairs that are really nice to trade.
Yeah, that's very true. Chris, next question for you.
Yes.
The topic of the day, as always, is the NASDAQ and NVIDIA. Love this one. I feel like I've had this conversation like once or twice before, but NVIDIA,
it's brand new this year, brand new. Nobody's talking about it.
Yeah, it's the first time ever actually that stocks get overdone. Anyways,
Right.
NVIDIA seems to be bouncing here, seems to have found kind of a short-term, at least low at the 118 level. Is this one of these guys, Chris, or is this a breakage in the story that could actually roll over further? What do you think?
Sure.
I mean, I'll give you my opinion. I think that this might have spooked some people, and you may see some follow through. Doesn't mean I think it's going down forever, but I actually don't know that I think 118 is the low of the year by any means. Like, I think that even if we go back and retest this area, I still think for NVIDIA that we're going to get something. We're going to get something that cools off the story a little bit, and we might see it roll over. But what do you think?
I would love to see it roll over for this reason. Let's just say the chart's going to be technical. So we have 1, 2, 3, 4, 5. Usually when we complete a fifth wave, if that high at 140 is the fifth wave top, then we're looking for some type of 1, 2, 3 wave correction. So to your point on the daily or weekly chart, we had a 3-day aggressive sell-off. Obviously, the market is trying to rip it up a little bit, and everyone got all excited because the Qs were up yesterday and the NASDAQ is up. But I would think that we're going to struggle to take out this high, either we're going to go sideways for a moment, for crying out loud. It's like this stock has just gone up, 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 and barely pulled back. But this was significant. I mean, this took a long time to pull back in April, and it's like, boop, just shed, 15, 16% in 3 days. So I would like to see a little bit more of this. I'd like to see high, low, lower, high, lower, low, offer up that type of discount, offer previous resistance becoming support, find a demand zone, find trend line support, find a good technical level to then be long. So if I'm waiting, which I am, I just have a bunch of options trade on NVIDIA. I've obviously dollar cost averaging over the years. But what I'm really doing, if you're long the SPY, long the Qs, you're long NVIDIA. So you don't have to, triple down and say I'm long NVIDIA, even though it is really the biggest beneficiary or the big contributor to why the SPY and the Qs are up this year by a long shot. But if I had my pick, I'm just trying to get positioned down in here. So I do have some exposure on it. I'm doing some interesting trades where I'm trying to let my options decay quickly and just repeat every couple of Mondays every month and just cycling through some NVIDIA put options. And so I just put on a trade for $2.40 credit that I'm going to try to pull about 30 to 50% profit out of the next 30 to 40 days. I will repeat that as needed. The positions I have in, if I go to NVIDIA here, this is just for a certain account or a specific account, so everybody has a similar exposure. I have a ratio spread. I have a volatility play out to August 2nd. I have a wide credit spread. I've got some naked puts. So I am willing to own NVIDIA, but the true price I want to own it is like under $90. If I'm going to own it, I want to own it at 90 if I can. Why 90? Well, if we came back to this previous high, right there is around $96. So if I can, essentially say that's where I want to buy it, I will start buying it at 100, but trying to lower my cost basis fairly aggressively. But let's just say that this is high volatility 140 to 117, and we go right back to test the highs at 140. Well, if that's the case, my little reverse iron condor that I have that's in the middle, if we go back and poke the highs, I get profit there. This week, Frank and I took this trade, I think last week at the end of it, Friday. I put on a trade that by Monday, Tuesday, this thing was already up from like a $6 or $7 debit. I was up like $1.50, $1.60 profit within like 2 days of trading. So I'm playing it both ways in the short term. I'm playing it longer term. Like I don't want to buy it right now. I'd like to see this thing correct. I know we just had a 10-for-1 split. Usually we should see a pullback. I'm shocked that we had a 10-for-1 split and the market ripped up $30 to $40, over the next couple of weeks. So look, NVIDIA, at this point, being number 1, 2, or 3 in the world, largest market cap company. I mean, by the way, we've seen this big fluctuation. We shedded like $300 billion in market cap, only to gain another $200 billion in the last couple of days. So it's all over the place. And if you're going to be in the top 1, 2, and 3, or the top 10 in the S&P 500, everyone's watching now. And so I do think that the numbers and the earnings really matter. Whenever we have the next earnings report, it should be somewhere out here. That's going to be August. So I mean, maybe NVIDIA pauses. Maybe there's some tech money getting taken. If you saw some proof of that, would be like FedEx today. FedEx had earnings. They were up a ton. It was way beyond the expectations. And the trades that I was looking at both paid out. And so FedEx and Nike and some other just other stuff instead of just NVIDIA and just tech. But I'd like to own it, man. I mean, I want to own it, but just not now. I'm sick of this thing going up as a person that wants to buy and get some value. But you got to I just trade options. That's it. I mean, if it works, great. If I take ownership, I'm trying to get ownership where I want it as opposed to chasing this thing.
I like it. Yeah, I'm the same way. When it comes to NVIDIA, I would like to be an owner. I would like to own some shares, but I'm not going to, I've done this for long enough to learn that, there are times where it seems like the market can't go down. And there are also times when it seems like the market can't go up. I remember in 2022, the agony of everything I would touch would turn red going, long.
That's true.
So there are times where, we just have, if I zoom out on my trading career and I look at it and I say, well, you know what, does this sort of stuff stay like this forever? No, the answer is no. There will be a time where things change. Sure, if you're a trader, you trade what's in front of you. You take advantage of what you see right now. And right now, stocks are strong. The prospect of rate cuts is still on the way. And I think that overall story this year is still going to be a positive thing for stocks. And we've talked about this many times, that prospect of like, well, when things do start seeing rate cuts, could it be rockier than people think? I think so. So, that's a different time. It's a different trade, right?
Yeah, and what we talked about yesterday with the rate cut situation is, if the Fed cuts rates in September and the language or narrative is this is now the official cut cycle and everyone thinks that every quarter Fed's going to cut another 25 basis points, I would say that probably puts in more of the historical, that's the top of the market. I mean, we talked about this. I think this is kind of expanding on that point. If we're going to see a very consistent Fed cut cycle, regardless of whether the softening economy, softening labor market, or if the Fed is okay, idiots, we will cut rates because we've been saying we're considering it, but now we're going to cut and then we'll wait for the next one. We're going to be data dependent for the next one. And it could be like the long awaited Fed data dependent. Maybe their next cut is not December. Maybe the next cut is not until like March of next year or middle of next year. I mean, if you go out, this is what I keep going back to. I wish this went out to December of 2025. It's not quite there yet, but if we go to September 2025, the market's still only pricing in about 125 to 150 basis points of cuts through the next year and a half. That's not a lot of cuts, and I don't know if the Fed's going to be consistent about it or something's going to break, but this will certainly help. I think in the U.S., this does help the consumer because right now, small business that is, not really accustomed to high borrowing costs for the last 2 decades, this could be a good help for them. It certainly helps the housing market to bring mortgage prices down to maybe a low 5s instead of high 6s or low 7s. If we get sub 5 30-year mortgages again in the US, I think that'd be great. You're going to see a lot of refinancing action going on. You're going to see some, higher demand as opposed to this pause. There's a lot of demand with no supply, so prices are high. Affordability index, it's now it's stretching people like 30 to 40% of their gross income to afford the median home. So I heard you and Kenzo talking about earlier. It is certainly out of reach for a lot of traders now, or traders, a lot of buyers now to buy a home that 3-4 years ago, the average mortgage was like $1,000, and now it's like $2,700. And I did the math on mine. Like I financed a house at 2.7%. If I had to buy a house right now at 7, the same house, my mortgage payment goes from $2,800 a month to like $7,200.
Yeah.
I mean,
it's crazy.
No thanks. Like that's crazy to think like that's how drastically different it is for a fixed expense every single month. And that, as you know, and if anybody budgets, fixed expenses, your house, your car, those two really right there. If you're overpaying for those things, that's a drag on you financially. So, yes. I mean, that's why living with your means is important. And if you have equity, sit on it. And right now, it's not a bad spot to be just sitting. If you're in a house and you can afford it, stay in it. Right. Mm-hmm. It's interesting how, I don't know, you guys in Atlanta, but I mean, are you seeing more houses pop up for sale? Are you starting to see a little bit more inventory out there?
And, Chris, I don't own a house. I currently still live in an apartment. My wife and I just have been kind of camping out. I mean, part of it is also just because, our crazy schedules. I'm not, home ownership is obviously a lot of work and time and stuff like that. And it is something obviously that like everyone else, I would, I want, and I could afford a house. I could go buy a house and just pay the incredible prices right now. But to your point, we watch Zillow casually. We're not in a rush to buy a house, which is a good spot to be in. We're not like, baby on the way, need a house right now. We're not at that stage. So for us, it's kind of like we're watching Zillow. And as you just pointed out, things have started to creep onto Zillow. We pull up Zillow and it's more colorful than it used to be. There's more stuff on the map. There's more things as time passes. And, I think that's an indicator by itself of slowly what's happening. The unemployment rate, if it continues to trend higher, it's another thing that might trigger Fed to cut rates, but also houses to start selling. Right.
Very true. So, I mean, that's things are going to be playing into the bigger picture. Back to the charts. I found something pretty cool that I'm doing this week in the background. Tasty Trade actually has a really good platform for back testing. So a couple of strategies that I have been doing for a while, I'm trying to verify to see, look, I've got about, let's say 3 to 5 go-to strategies in my options accounts. And I want to show that if this is all I did for the last, let's say 15 years, what does it look like? I mean, I have a pretty good indication of what it's going to show. It's going to show profit, because if the market's up to all-time highs, I mean, unless you're trying to be a bear for 15 years, you're probably going to find a way to make some money. So I'm not really that concerned. It's more about, like, if I get into the details of my strategy, the nice thing is I can be very mechanical about my approach. And so, for example, I talked about NVIDIA in some naked puts, cash secured puts. I do a lot of synthetic stuff now for the IRA accounts that I manage, so I can reduce the size of the buying power that's required. And so I am watching for some levels where, let me see what this account, just as an example, just this morning, let me see what I did here. So SPY this morning, I'm going out and I'm doing basically leaps on some of these stocks that I really, really like, and leaps on the SPY, but I'm not looking to hold it for the full, 300 to 365 days. I'm looking to basically hold it for like 30 to 40 to 60 days. And so I'm hitting certain profit targets, something that you can allocate the capital, take out that time premium, and then redeploy it. And so you have a little bit more frequency in this over the course of, let's say you do it every Monday or every couple of Mondays. It's probably going to generate 20%, 30% on your capital outlay, and the average return on capital is around like 7 to 8% per investment. And let's say you did this every couple of weeks, like, it just, again, time in market is better than timing the market, and trades like this that are tried and true with indexes and stocks that ultimately are trying to go up. I know you and I both know that if something gets really ugly, we're going to have another bear market. We're going to have another pullback. We're going to have another nasty correction. But I wish, if we can make this, public service announcement for all investors out there. Do you think, Nick, that for the next big bear market, that it's going to be like, it's different and it never comes back? Is the US going to become Japan, where we have a 34-year drawdown?
I don't think so. I think you certainly could have a cool down, but if you look at it from like a decade perspective, 2000, 2010, we saw a decade where there were not gains on the stock market.
Yeah.
Then the 10 to the 20, we saw huge gains, and so far this decade seems to be a strong few years so far. I do think that you probably get some pullback in there, but the broader theme, I think, is still, continued growth for the U.S. And I would be surprised if we had something kind of break that takes us from the number one spot anytime near the future right now.
Sure. Let's talk gold for a second. Are you still just kind of holding tight? Are you buying anything else? Or are you just waiting?
I have a trade on gold. I am close to getting stopped out on this one. If it does break support around 2,300, I'm going to take a pause on it, take a loss on it, and relook at it. I still like gold and silver to the upside. I'm not, convinced that it's going much, much lower, unless you get, from a fundamentals trigger for me. If we get something where we no longer are expecting rate cuts this year, if inflation comes in red hot, if labor data is not, if it slows to to kind of not moving down anymore, if you get strength in the economy and hot inflation, that story would tell me to pause on the gold idea. For me right now, I've got this 2,300 level marked up. If price breaks it, I'm going to go ahead and take a loss on this idea. I've had pretty good trades on gold this year. This one's not worked out very well, but if we bounce or we find support and I can stay in this trade, great. But if we don't, if I get stopped out, but then we still kind of see recovery, I'm still very willing to buy gold. I just need to see a technical. Right now, technicals don't seem to be very good unless we bounce off this 2,300 level. That would be my my take on it. What are your thoughts?
Yeah, that makes sense. I mean, I think that for the better confirmation, this is a little bit more of a kind of a passive trend line, but certainly watching the 2275 level. The last three out of 4 days have been down. But if we hold that level, like you said, I mean, I like that. If there's a bit of a fake out, like let's say the bears, slam it back down here, but then we rip right back up, that could be just a nasty little liquidity bump, and then we see this thing, come back up. I still think it's kind of sideways in a broadening pattern, some choppiness after having such a good run that we're just going to go sideways for a little bit more to kind of justify all-time highs. Now, you got to wonder too, like, what would be the macro environment or the scenario to see gold break all-time highs again? I still think silver is better. I still think the technicals are better on silver, but also silver you can see is flirting with trendline support. It's starting to break the last 3 out of 4 days, selling down. If this is a bear trap where we come back in and then rip back above this trend line, I like that for my silver trade to get back up towards $35 or $36. That's XAG. So technically, I still like silver slightly better. It's also way cheaper than gold, but you can obviously dollar cost average in and trade fractional gold if you want to. So anyway, I mean, something worth watching. Gold and silver is a nice little differentiator in the portfolio. It doesn't have to be anything that's highly correlated, but I'm going with some dollar strength for right now in some of the currency pairs in the dollar. I'm still long gold. I'm still long silver. Watching for big levels. Bitcoin, you had mentioned. We're stabilizing here. I think as long as we hold this kind of 60 to 56K level, Bitcoin still looks pretty good to maintain some support. Ethereum has not sold off as aggressively, but same type of thing. I mean, we're coming back to fill this pocket. I would like to see, in fact, I have a futures position on it's a micro Ethereum futures position, 3175 and around 2,900, looking for some fills there, going out about 60 to 90 days if I get those levels filled at those prices. So anyway, I think Bitcoin, Ethereum still look good posture-wise, and let's see if gold and silver make a run. But if the dollar is going to get stronger, that's going to put some pressure on everything I just mentioned. Ethereum will probably be sluggish, Bitcoin sluggish, or gold and silver both a little sluggish if the dollar is going to gain. But at some point, let's say that we can actually be way more convinced. And based on what you see right now in the DXY, Nick, are you bullish on the dollar? Is this enough for you to convince you to be long the dollar?
Well, I think for me, the breakout point, Chris, at that 106 level, 106.5, that to me is the trigger for if it's going to get me out of my gold trade. If that happens, it's going to get me out of my silver long position.
Yep.
What's going to get us there is going to be probably what could get us there would be a hot PCE print, a hot CPI print, or a really hot jobs data print. Those are the things that would get the dollar to break out. If that happens, yeah, I think short term you have more upside to the dollar. Right now, where I'm at, I'm just a little too. It's just too choppy for me. I'd like to see a breakaway move to get bullish the dollar. Or, like I said, if I want to see silver and gold push higher, I'd like to see these areas kind of reject and the dollar to weaken alongside the other currencies. But I also think, long story short, the dollar's also moving up because other central banks are cutting sooner. We talked about that at the beginning of the show with like the UK, etc. So, yeah.
Yeah, and that's the same conversation we've had of if they're going to hold on to this pause cycle the longest, it's going to give the dollar a little bit more attractiveness. There's still some risk appetite. This is why I'm still long against the Swiss. I like the positive swap. The Swiss National Bank cut to 1.25. That's 2 cuts by a major central bank. European Central Bank cut. Bank of Canada cut. But oil prices have been, I think, helping the CAD a little bit. I'm still bullish on oil for now. I've got a crude oil futures trade in that as long as price stays above this little U-turn, CL is the feed there. So as long as price stays above 72.50, I'm good on that credit spread, looking to stay long. Even if it's choppy, I've at least put a line in the sand there at 72.50. So hopefully that pays out fairly well by just letting it do its thing for the next couple of months. And there's typically summer demand. We don't see a lot of bear markets in the summer for oil. But again, range wise, we've got highs up to 95, lows down to 65. And I think oil is kind of stuck in that range. I was looking at the oil price or the gas prices today at the pump. I'm out here in Utah, and I've seen about a 30 to 40 cent swing in the last couple of weeks. I looked at the AAA gas prices, and it shows like the last 30 days is only like a 3 to 4 cent different on national averages. So I don't know about, again, I just thought it was interesting. It's like, that's a big swing. Like 30, 40 cents is a big swing. That's a 10% swing at the pump. And I just looked to see, is that transferring elsewhere with the national averages? And no, it's like a 3 to 5 cent change over the national average. So
it's interesting.
What's up with Utah? So these freaking tankers
I don't know,
out here.
you guys your gas must just be better than everywhere else there. So
maybe it's that elevation, right? We got like that pure.
You got to drive it up the
pure
hill.
Mountain gas.
Yeah.
Oh boy.
Well, cool. Chris, I'm gonna leave the show to you for a few minutes. I think Frank is gonna join you for a little bit. Either
Okay.
way, you got the show for a little bit. Go through whatever you'd like to go through. And for everybody who's listening here with us live, Chris has his own social media accounts. You can find content from him at Real Chris Pulver on Twitter. And if you're watching on YouTube, we'll drop the link to his channel there where you can check him out. Chris, you got the show for a little bit, man.
All right. Thanks, Nick.
All right, man.
For
See
the
you.
rest of the day. Yep. Bye. All righty. Frank comes in, which would be a lot of fun as always. We can talk shop. I've got a couple of trades that I put in today. I was looking at some SPY. This gamma level stuck out like a sore thumb, and the contract sizes are pretty large. We're at 548 now. Today, as a Wednesday, seems to be not doing too much. It's already 10:45. I looked at an SPX trade this morning, and I wouldn't be surprised if this is already paying paying partial profits. Where was my trade here? So trade the SPX. I've got it posted here in my 0DTE tracker. So we were sitting at 54.55. I sold the 54.80, and I went 20 points out to make that a synthetic strangle, just because I'm not going to put pony up $100 grand in this trade or $500,000. That's insane. So I did a synthetic where I'm going to wide iron condor. If those of you know strategies, they're stupid names, but serious business. That's a shout out to Schlotsky's Deli, by the way. I don't know. Maybe that's not relevant at all. But I sold the 54.80 and then the 54.25 on the put side, and also went out 20 points. Oops. 54.05. So that was initially the profit's already been taken. So 275, 280 credit up front, trading for if we get down to 230 or lower. And I can sit and let this marinate for another 15 to 30 minutes. And if it stays where it is, this is probably going to be right there, like trade's done. So right there, there's already a win. That's about 45 cents in the net win. And then I'll wait to see, that is sitting here at 10:46 a.m. So we have a 225 debit by 10:40 a.m. Eastern time. So that marks, I want to say 9 out of 10 trades in the last couple of weeks. So win, loss, win, 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 1, 2, 3, 4, 5, 6, 7, 8 out of 9 trades the last week or 2 weeks rather. And it just seems like a pretty easy trade. Now, that's because the market's not super exciting for the first 60 to 90 minutes. If there's some chop and some noise, you can see that, if I centered it initially around 54.55, the price has gone up about 10 points. But now that enough time has passed, it still let me hit my profit at that 15% take profit. So anyway, good trade in the morning for the SPX. I'm looking at the SPY. I was showing you my gamma level here, and I'm looking at this 548. Now, I like this level. I don't see a lot of sizes here that are over, 1,500 contract size or 2,000 with open interest. So what I'm looking at is, if this is today, I could just take a 0DT and pay next to nothing on this. But instead, I went out to Friday and I went out of the money. And so I have a 548 call for Friday. I paid 65 cents for it. And right now it should be up a little bit of bucks, not a ton, but let's find out. My 548 right here. I paid 64 cents, is up 74 cents. I mean, if we get a bullish move today up to 548, the nice thing is this is probably going to be worth $1.50 to $2 and change, and I'll turn this into a nice little profit. So for the intraday trade, I hope it gets to 548, but I didn't want to just put all the all the marbles into a 0DTE. So I went out to Friday as the expiration. It's also end of month, end of quarter, and that just seems to be a gamma level that I'm noticing could be pretty significant. So let's take a look at the charts right here. Let me make sure I'm not just talking over Frank the whole time. I'm not. So let's go short term. Here's SPY. We're still red on the week. Okay, we're still red on the week. We are trading inside last week's high, last week's low. So if we are doing some chop right in here, okay, fine. Is the market capable of breaking higher, breaking lower? I don't know. Let's find out. So 548 is kind of right in the chop. We could get there, if we retest this week's high so far. But this, last week's low to the last week's high have not been breached. And I was wondering, what does happen by the end of the week, end of the quarter, if anything? Because one thing we do have, if we don't have any crazy volatility, we do have core PCE on Friday. Maybe that gets the markets a little bit more excited. Is perhaps we have a little bit of a lull because this week is the end of the quarter, but maybe not that exciting. Maybe there's no real catalyst. We only had 30-some companies reporting earnings. FedEx had a big one. Nike has earnings, I think, tomorrow after market. Let me go to where's my earnings here? So we have General Mills that came out this morning. We have Levi. We have BlackBerry aftermarket. Micron, which is a semiconductor. That I did look at some price action on Micron. I didn't like it. It only hit the expected earnings around 3 out of 10 times for the last 10 prints. That's not enough to convince me like it's going to do it. It could be a big miss, and it'd be great to be a seller. But if you are looking for some explosiveness, I mean, FedEx, for example, blew through the expected move. I was looking at a credit spread on FedEx where I was doing an in the money bull put spread at like 270, and it blew up to like 280. So it was way beyond that, which allows you to take some nice profit on that in the money credit spread. Your net profit's going to be like $1.50 to $2 if you took the trade with me. So anyway, Micron is in the semiconductor space. We've obviously seen NVIDIA pull back a little bit, but if it's starting to stabilize, maybe there's a big emphasis on like semiconductors and some type of earnings pop. We have Walgreens on Thursday. We have Nike on Thursday aftermarket. So again, only a light earnings calendar. Some of the notables here, but there's only like 30 some companies this week, and that kind of wraps things up for Q1 earnings. And then we will wait and see as we get into July when we kick off Q2 earnings. So we'll start with financials. We'll work our way into the Mag 7 or, all about NVIDIA, right? For better, for worse. But anyway, if we go into this week and we wrap up the month and the quarter that there's not a lot happening action-wise, next week is a holiday week. But a couple things to note, okay? Holiday, July 4th, markets are closed, U.S. holiday, but we do have non-farm payroll on the 5th. Non-farm payroll on the 5th is either going to be an absolute dud because it's during a holiday weekend, right? And people are just like, well, I'm off Friday, I'm taking off Thursday, taking off Friday, have a long weekend, enjoy the long weekend. Or it's going to be one of those news announcements where something bigger happens because nobody's watching. Maybe the market's really thin volume-wise. Those can be perfect cases for big movements when nobody's around. So I'm going to watch. I too want to have like a nice holiday weekend, and I would like to not have a bunch of trades expiring on Friday. So I probably won't, heavily position for a Friday move, but I will watch price. Even if I'm on my phone, I want to pay attention to see if anything wild and crazy happens in the currency land, for the dollar crosses, or if anything happens in the stock market, because there are, if I'm not mistaken, there are July 5th expirations. So, yep. I mean, we have a Wednesday, we have a Friday. So no Thursday trading, but Friday expiration. So we could see something interesting. But so far, this is a quiet week. From top to bottom on the SPY, we've only gone about $4.30. That's a quiet week when the average is around 10. Okay. So I am happy to take some requests. Any charts you'd like me to take a look at, I'm happy to review. I did a nice thorough Forex review this morning. Like I said, I still remain long against the Swiss. Somebody had mentioned dollar Swiss in the chat today. Dollar Swiss is a good looking trade for me. This is what I'm doing. I did buy a little dip around this 38% pullback around 88.80, and I'm looking for a potential next entry if we pull back into this like 50 to 61% zone. So this is area 1, area 2. I'm looking to add a lot more on the right-hand side of this trend line. I do see a really nice head and shoulders pattern. Left shoulder, head to neckline, okay? And so what I'm waiting for is if we can start to see a pullback to a right shoulder. And maybe it's now. This can certainly be a right shoulder, but I'm going to be a little bit more patient because oftentimes these patterns, and Forex especially, come in with symmetry. So if this is my left shoulder, I look at this as probably the right shoulder. If I want to buy in this area, that's a good spot to line up a nice symmetrical pattern. And like I said, if I go low to high, I'm going to project that move based on a symmetrical measurement towards probably 96 or 97. That's going to be my big target for dollar Swiss. If we go up any further than that, 1.00 or parity is another big level as well. That could be a 5-wave move. So if this is wave 1, we're getting a correction for wave 2, looking for a push on wave 3. I try to make a lot of money on wave 3s if I can. I mean, I was in early. I was dollar cost averaging into this, kind of looking for a wave 1. We had a wave 1. There's some nice profits there, and then I'm looking to add. So just a little bit of technical analysis, good stuff. But dollar Swiss is a good looking trade. And again, measured move wise, I'm looking to get up towards 96 to 98 or all the way up to parity, ideally 1.00. So it's a good looking trade in my opinion. I see dollar CAD asking. So dollar CAD, I'm still long. The red line is where my stop loss is. I'm still holding long. If the dollar CAD continues to push, we can get a nice simple trend line break there. I'd obviously like to see there's kind of a morning star happening here on the daily chart. I would like to see something like this. We get into some bullish confirmation. We hold this support level. We start making a run back up towards these highs. I like taking profit here around this 139 to 140 level. If we have a 139 to 140 level, I can either take profit and then look to see if this thing breaks. We have open space. If we get above 140, if the dollar is greater than 140 against the CAD, there is room to run all the way to 145. So realistically, this could be a pretty big opportunity for the dollar CAD. I've really, I'm not going to say hate because I hate the yen, but I really have disliked the dollar CAD because it has been very, very slippery. The levels I want to buy at, it doesn't really test. The levels I want to sell at, it doesn't really test. It's just been a weird behavior. Now I have bought, I mean, in the last couple of years, I'm trying to think this breakout here. That was like a right or ascending triangle breakout. That was a nice run into establishing that, overbought condition at 140. But if we pull back here, it's like we've had a 2-year plus range, right? This is 2022. We're in a 2-year range. So right now, you got to respect the highs, but I'm still bullish off of this low towards those highs. So we had a chance to buy this, which was a nice trade. We had a chance to sell this, which was a nice trade. Had a chance to buy this, which is a nice trade. But in between, a lot of garbage, right? A lot of garbage in between there. So I'm staying the course on dollar CAD, trying to get this thing slightly higher, testing levels, taking some profit around that 3,900 to 1.40. Then I'm looking to see, okay, let's say that we hit 140 and then we turn bearish. Well, that's fine. Look for a swing trade and then see if we trade back to the middle of the range. Maybe it comes all the way back down to stay in this 2-year range, right? But economically, we just saw the Bank of Japan or the Bank of Canada cut rates. Fundamentally, economically, the Canadian economy may be in a different state than the U.S. at this time. So I'm just throwing it out there. I mentioned this in my trading room. I mean, if we break above 140, I can't deny a potential run towards 145. Now that'd be an incredibly weak move for the CAD versus the dollar, and I don't really know if it's all CAD dollar driven or this is going to be dollar driven. I'm not sure, but right now I'm long dollar CAD, and I'm going to stay that way until price proves otherwise. I mean, if price comes back below, let's say 3,600, I might move my stop loss up tighter and just take the small loss. But if we come back up to 38 or higher, I'll probably just use this and start trailing up and eliminate some risk, trying to get that 139 to 140 profit target. Okay. What are the other ones I saw? New Zealand. Linda's asking, what is that? Is that New Zealand CAD? It's got to be New Zealand CAD. Yeah, New Zealand CAD, I still like long. A couple things on this one. Again, price pattern potential. If we have a left shoulder head to neckline, it's obviously taken a little bit more time to carve out a low here. So this could be a larger low with a higher low. Okay, I think that the potential trend line right there, I still like the structure. We're getting a pullback, but I'm looking for a trend line. Just kind of hold. New Zealand CAD pulls back, maybe finds a pocket or so, but I'm still looking for this level to hold and be a buy opportunity for New Zealand CAD to be bullish. Measure the move. This low to high, this low to high. We're looking for something around like 92. That's my measured move. So I like bullishness on this pair back to at least this high, which is 88, and measure that move to symmetry. You're talking about a push towards like 92 to 93. But I do like New Zealand CAD long. I'm in that trade as well. Okay. Dollar CAD we just did. CAD Swiss, I like CAD Swiss a lot. This is also one of my favorite technicals right now. It's responding a little bit better. Dollar Swiss might actually look cleaner than the CAD Swiss. I was really excited about the CAD Swiss when we started to make this run. I was buying in at equal lows. I was buying in at trendline breaks. I had a nice little chunk of profit on the CAD Swiss that's pulled back and essentially reset to zero. But I'm not done with this trade. Again, if this is a head and shoulders, left shoulder, head to neckline, I know it's a little bit more angled than I'd like to see it, but it's still a valid setup. If this is a low to high swing and we're putting in a higher low, you can measure that move. But my profit target on the CAD Swiss is up here, 71 to 72. That's going to be my profit target. If this is wave 1, this is a pullback wave 2. If we're looking for a wave 3, wave 4, wave 5, that should be enough to get there for me, right? So I'm waiting. I'm patient, but I do like the CAD Swiss long to stay with that trade. So I like CAD Swiss long, Linda. I like dollar CAD long and New Zealand CAD long for right now. That doesn't really mean that I'm bearish on the CAD, because another trade that I really like, it's not quite setting up yet, but this one is probably the closest of the CAD crosses for me. Euro CAD, if this goes a little bit lower, okay, I'd like to see this push a little bit lower, take out these previous levels, make a nice clean trend line break. Then I'm going to look for a swing trade. We get a pullback here, stop loss above, go for a swing trade, target that low. There could be some good reward to risk there, probably a 2-to-1 or better. And that's a good setup on the Euro CAD. Pound CAD, same type of thing. Pound CAD needs a little bit more confirmation, but we are selling off a little bit. I was looking to sell this thing at 78. Not quite there yet. We bought a breakout here. I grabbed about 40 or 50 pips. We had enough to get about 150 pips out of that trade. I got it a little bit early, but now that we're starting to turn the corner a little bit, I'm not quite convinced that this is the trade that I want just quite yet. But if this thing slides low enough and lower, takes out this low, I'm looking for the same type of thing. A swing trade. Look to get in, stop loss above, target this level. Look for a reward to risk ratio, maybe 2-to-1 or 3-to-1. So Euro CAD, Pound CAD are on my radar. I want to see a bit more confirmation to kind of confirm that the bears are taking control structure-wise, and we'll go from there. Okay, so I like those trades quite a bit. Euro Swiss asking from ZA, sure, Euro Swiss. Euro Swiss, similar. This one, pattern-wise to me, this is a good-looking trade. I know that we had a very violent pullback over the last month or so, which is okay. And I told traders, look, I'm not going to budge on my trade plan. I'm still bullish against the Swiss. I still like Euro Swiss long. We probably came back in just to test that wick, and now I want to see how the bulls can prove that they're ready to sign up for another leg higher. Again, we broke all the structure right here. Came back to retest the backside of this trend line. Not a bad play. Just got to put in a bottom, right? So if we hold this level, I am looking to see, what I'd like to see is I want to see a bullish pattern in here. So anywhere now for the next 30 days or so, watch price closely. I'm looking for a bullish pattern to emerge. So if we just go straight down and straight up, that's not really a bullish pattern. That's a V bottom. That's tough to trade and certainly tough to time. But I did have an entry right in that wick. I bought the Euro Swiss right there. And so far, that seems to be a pretty good entry. That's at least responding with price. Now, that's one entry. Let's say that price pulls back a little bit deeper. I'm prepared to take this for a double bottom and then not reposition. I'm going to maintain my core position, but add some more trades and see if this comes all the way back up to the highs again around 99. So in this summary, I like this structure. I'm looking to see if this is a swing, pullback, swing to get us up above parity, and then possibly a fifth wave move into these highs around 105 or 106. That's my final target on the dollar Swiss, 105, 106, right? If we get above parity on a swing for a wave 3, I'll probably take some profit on that. Okay. But again, I think I've got some good lineups on the technicals on the Swiss crosses. It's positive swap, unless you're trading the Swiss yen, which I'm not. But everything else against it is paying me every day to hold it. But that's my thoughts there on the dollar or the Euro Swiss. So we did CAD Swiss, dollar Swiss, Euro Swiss. I like the setup. US 30, sure. Interesting divergence on the US 30 versus the S&P, right? I still like the Dow. In all honesty, I still like the Dow overall. In fact, I'm going to look at something right now for the DIA. DIA. I'm going to go out 359 days, and let me see if I can go to a 10 delta and see what that price is. So I could do a 320 put. A 320 put on the DIA. A 320 put is way the fudge down here. We're talking about we'd have to come back below the low of 2023's correction, that September, October low. That'd be where my trade is, in jeopardy, or I'd be willing to take assignment. All I'm looking to do here, let me see what that credit offers. It's only $1.30. That's way less than I thought. I was thinking I could get a little bit more for that. Maybe I could do something in the Qs. Let me try something here. I'm certainly a little more reluctant to go into the Qs just because it is a bit more volatile, but the premiums might be that much better. So the Ivy rank is 28.9. Qs Ivy rank 19.1. Let's go 359. Look at a 10 delta. I can go to these numbers are weird. So I go out to June 20th of next year, go out to a 10 delta move. You're looking at a 364.78 put. Buy power reduction is 36.68, so about $3,700, but I can get 542 credit for this. 364 on the Qs. I mean, you're talking about that 2023 September correction. If we end up going sideways, that's going to be good for my trade. We go higher, that's good for my trade. We go down a little bit, it'll it'll change. I'll be in a slight drawdown with that, but not a ton. But I'll watch this fluctuation and hopefully, I mean, look, a summer trade, probably for the next 30 to 60 days, I could suck out of this thing maybe 20 to 30% profit. Let's say I do that. Well, if I'm collecting 543 up front and I get 20% out of that, I'm going to turn this into $120 in the next like 30 to 40 days. Okay. Somebody just got long US 30. Okay. So US 30, let's go back to that one. US 30 and you're long. Are you long with, are you trading futures or are you trading the CFD? So if I'm trading US 30, I'm usually trading like Dow futures, which would be this feed. This would be my M. I could go micro futures on the Dow. What is the symbol there? MYM is the micro E-mini Dow. So when I'm trading the US 30, I'm trading the Dow. I'm typically trading a futures trade for me as a US trader. If you trade US 30, you're probably a non-US trader. Yes? Yes, says carry trades on euro yen against the yen pairs overall paying well. Yeah, if you're long against the yen, the carry trade's great. The only scary thing is if there's intervention, if there's some event that is aggressive repricing or there's tons of volatility that's unforeseen, the yens are very tricky in that respect. So look, I know that if you just got through the the intervention we had a month ago, whenever that was, I mean, you're fine. You're back up to those highs again, and all is well, right? So yeah, the carry trade is alive and well. It's not unraveling yet, but I'm choosing technically to be participating in the Swiss as a carry trade as opposed to the yen. The Swiss has cut rates 2 times. I like that. I'm happy that they did. It was a surprise. The forecast was 1.5, and they came in 1.25. So that was a nice little pleasant surprise, and I'm hoping that they stay that direction or stay a bit more dovish. Okay. All right. Sounds good. Overall, directionally, I mean, this is what I'm seeing on the US 30, similar to the Dow. We are making slightly higher lows. This could be setting up for some type of ascending wedge, and we do something like this. Stay choppy, stay choppy, stay choppy. But what would be nice to see would be a broad market lift and maybe a higher high, and the Dow stretches higher, the Q stretch higher. The broad market, look, I want to see the SPY and the Qs, okay, and the Dow and the Russell. A healthy bull market, and I know you can't read those hieroglyphics there, but all 4 major indexes in a healthy bull market should be going up. We shouldn't have this up and this down and this flat, right? Healthy bull market is these are all up. Healthy bear market, if there is such a thing, which there is, when we have aggressive bear markets, everything is down. So it's nice to see that broadly speaking, everything goes up. So I see this potential ascending wedge, right? We're up here, we're having equal highs, we're having higher lows. A lot of times this will coil. Okay, this is not a rising wedge. Rising wedge looks like this. Okay, rising wedges basically get to the point where they can't go up any higher and they break. An ascending wedge is resistance, 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 and it breaks resistance, and off we go. And you can measure those moves based on fib swings and extensions. So if we go higher, I'd love it. And if somehow this one comes back down to lows, I still think it's an equal support level. So I think I'm going to go after some again, I'll probably do the DIA and the Qs, but the credits seem pretty darn good. And then same thing on the IWM. IWM is not terrible. It's a slightly higher IV rank. Let me see what I can go out for a year and maybe get a leap going. So I'm tying up some buying power, but not a ton. Maybe about 10% of the buying power allocated to some of these. I guess I can call it like a short-term leap. I know that's an oxymoron, but I'm going out in time, but I'm using time quickly in my favor to then take my profit targets. Okay, so I'll have some more information on that. I will be, working in the background on doing some of these tests and showing some basic strategies that I do and how consistently profitable they are over time. And if that's of interest to you, then come back in and tune into a session when I'm on, and we'll talk about it. Okay, Aussie Swiss. Sure thing. Aussie Swiss at 59.65. It's made a nice little U-turn on this trend line break. I've been looking to buy the Aussie Swiss based on equal lows. I'm long the Aussie Swiss. I had a pullback into this area, so I did get filled on that wick. We had some fresh highs. I since had a pullback. I have a couple robots running as well that are devoted to just buying against the Swiss. So if we have another decent trend coming, my robot should also be cleaning up, doing pretty well. What I like about this recent move is we just poked out that high, and we're on the right-hand side of the trend line. So I still like Aussie Swiss. I'm still going for higher highs. And where to? I'm looking left on this chart. Okay, looking left on this chart. And two levels that kind of stand out. All the way back here, look at all the structure around this 6,400 zone. That to me is a big profit zone of liquidity. Okay, the next one would be if we get back to this level, support, nearly resistance right around 62. So I'd say between 62 and 64, that to me is a nice, safe profit window. That's another, 250 pips away, or if you get to 64, you're talking almost 400 pips. So again, I like the upside. I like this just steady carry trade plus some technicals. And this has been, and by the way, this Swiss stuff didn't just come up out of nowhere. Like I have been long against the Swiss since the turn of 2023. Because as soon as I noticed that brokers were finally providing positive swap, I started averaging into Swiss crosses. So I've been in this trade for a while, right? A year and a half into it, what do I have to show for it? I mean, I've got about 4,000 or 5,000 pips that I'm sitting on right now, profit, which is cool. But I'm also sitting on about I don't know, trying to think, almost 8% swap on some of my positions. So from my account size that I was using, about 8% of that is swap positive, which pads my bottom line. I can afford to sit in these trades because it doesn't cost me anything. In fact, it actually pays me. Okay. So anyway, food for thought. Okay, it's just after 11 o'clock. I'm going to run to my trading room here in a few minutes. I do want to put a position on the Qs, most likely in the DIA. I might put on, I don't know, I might look at the futures market actually and see maybe I'll compare the difference. But the difference would be if I did a DIA versus a QQQ, I can take shares of that. I'm not going to take shares in the futures market. But I want to see what I get credit wise. It's not looking at a long-term hold. I think now's a pretty good window that if I'm generating income or collecting premiums on sell options, I'm only looking for like 30 to 60 day cycles to take profit. So if I can get a 10, 15, 20+% profit target, I'm okay with that. I just redeploy it. So anyway, like I said, I'll do some back testing on my end. I'll just show look, these are the core strategies I run. Here's how they do over time. And I think going back to 2011, 2012, 2015, 16, when the market sideways, 2019 when we had a pullback, or 2018 at that aggressive dip at the end of the year, strategies that have experienced drawdowns, right? So it's not perfect. There's going to be some nice like bear markets and bear moves where it's not just the stock market goes up all the time. But like I said earlier, time in the market is better than timing the market. That's hard. Timing the market's hard. Pound dollar just fell. How hard? For the day, I mean, it's down on the day, but that's because we have the dollar up, right? Currency strength wise, dollar's up. Aussies faded off that CPI news this morning. Dollar's up. Everything else is down. I mean, I'm fine with that. Look, the dollar has finally proven a little bit more so than the last couple of weeks. Like the dollar is proving that it's getting some love. I said 105.60. It was choppy. We're making a nice, clean, kind of definitive break above it. If the daily closes above, which looks like today's a good indication, and the weekly candle closes above, I'm long the dollar. Doesn't mean I'm long on every individual currency pair, though, because some of them just don't look good. Pound dollar still choppy to me. Aussie dollar still choppy to me. But I'm short the euro dollar. I'm short the New Zealand dollar. I'm long the dollar CAD, long the dollar Swiss, not trading the dollar yen. Okay. So that'll wrap it up for my little portion today. Thanks for being with us as always. Nick and the team, A1 Trading, you guys always do an awesome job. Kenzo, any other guests that came on today or this week, it's a great session to tune into. So keep tuning in, like and subscribe, all the good stuff. It helps out everybody and everything. And if you want to join my channel, great. My channel is youtube.com/Chris Pulver. My Discord, if you leave me a comment on any video on my session, just ask me to join my Discord channel. I'll post a link to you and reply. So my server in Discord is Chris Pulver Trading. But anyway, that's it. Thanks a lot, everybody. I'll see you soon, and see you guys later this week. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.